This is Adhitya Srinivasan, and this is the Private Office Podcast. This episode is brought to you by Synergy Gulf from Dubai. In today's episode, we're going to be talking about the taxation of online gaming. Now, online gaming is an issue which has resulted in a raging debate over the last few years. And it's a very exciting issue because there are so many different angles to it. Each time there's a development in one aspect of this policy issue, you find repercussions in other aspects of it as well. And that's why I think it'll be very interesting and exciting to see how this issue develops in the days, weeks, and months to follow. I have with me Mr. J.B. Mohapatra, former chairman of the Central Board of Direct Taxes. So as always, thank you for joining us.
Thank you.
And before we get into the discussion on online gaming, I just want to provide some background on the subject of online gaming. The first thing to know about gaming is that it's a huge, massive industry, and there are various kinds of gaming. In today's episode, we're going to be talking about a specific subset of gaming, the kind of gaming that involves money, the kind of gaming that involves a distribution of money to people who actually participate in these games. So with that in mind, sir, I think the first thing we'd like to understand is what do we mean by winnings from online gaming and what is its relevance in the tax statute?
Now to begin with, the winning per se, if we take into account the changes through the Finance Act 2023, which has resulted into two basic and massive amendments in the Income Tax Act. One is the insertion of Section 115 BBJ for the taxation of the winnings from online game, and the other part is 194 BA, which is the TDS part of the winnings. If you look at the whole gamut of the amendments made, there is no definition of winning in the Income Tax Act. Right. Neither in 194 BA nor in 115 BBJ that there is a reference or there is a definition to winnings. So we have to willy-nilly go to the original parent which has given rise to the concept of winning. So here, by all means, the source of the amendments in the Finance Bill and the Finance Act with regard to online gaming is coming from the Intermediary Guidelines and Media Ethics Code 2021 as amended in May 2023. There, winning is defined in Rule 2 QD. Winning, as you said, winning will be a prize either in cash or kind, distributed or intended to be distributed based on the performance of the participant and the terms and conditions of the game. So, the winning part, not just the winning part, there are other parts to the amendments in the Finance Act with regard to computer resource, with regard to internet, with regard to online game per se, with regard to online gaming intermediary. All these are not the original construction of the Income Tax Act. These are being derived directly from what is there in the Intermediary Guidelines and Media Ethics Code 2021 as amended in April 2023. So this is very, very pertinent. And rightfully, the revenue has not attempted to define these technical items. They have borrowed it from the original source.
So I want to come back to a few of these points that you've mentioned. And before we do, I think just in lay terms, what the Income Tax Act is trying to capture is that there are these games which are available on the internet, which are being hosted by a gaming intermediary, an online gaming intermediary. And what we're talking about is the fact that there are users or participants who play these games, they put in money to play these games, and if they succeed in the games or if they win or if they do better than others, they get some sort of a payout. I'm trying to express it in as lay terms as possible.
Correct.
What the Income Tax Act is trying to capture is this payout which is being made to users.
Correct.
You made some interesting points in your opening remarks, sir, one of which is, firstly, you highlighted the fact that these concepts have been, in a sense, borrowed from the Information Technology, Intermediary and Digital Media Ethics Code of 2021 as amended in April 2023. And you said that it's correct of the revenue to have not tried to define these terms themselves.
Absolutely.
Please, could you explain to us why, sir?
See, first of all, income tax legislation would be basically to target and reasonably define what is income.
Right.
What goes into the making of that income, how people do business, that is not the original mandate of the income tax department to get into. In this case, the online gaming industry, how it is performed, how it is regulated, these are the domain and the preserve of somebody else. And when, I'll also give you another data point as to why, that you could as well say that the finance bill was tabled in January 2023, but and the rules came little later. But the media, the intermediary media guidelines, intermediary guidelines and the media ethics code, it came out in April 2023. And how could they draw? How could they draw upon something which is coming little later?
Right.
Right. The mystery is solved because the draft paper for the amendment to the intermediary media guidelines was circulated in December 2022.
Correct.
Right. So, what I would say that rightfully revenue has not gotten into the minute and the definitional areas of online gaming. It has broadly leaned upon, rightly so, towards the definition provided by some other legislation or other regulation, so that it does not get into areas in which there is a possibility of clash.
Right. So there are at least two very good reasons why this has happened. As you say, one, I think the revenue's role in government, among other things, is to tax income which arises from a particular business activity or a set of activities that take place. And it ought to be activities which have been predefined by the regulator who is supervising that activity, as opposed to something which the revenue is trying to say that this is an activity and we're going to tax it. So that's one aspect of it. The second aspect of it is there's obviously a huge practical issue if you have different agencies trying to define things differently, and there's obviously the possibility that something may be lost in the gap.
Absolutely.
So I think these things have been prevented by going with the approach that you've identified. We'll eventually talk about what these new amendments are and what the position is. I want to go actually to what the position was before we had any of these amendments in place. You mentioned that we have a new provision, section 115 BBJ. Prior to that, we had section 115 BB. But as I understand, even section 115 BB was only introduced in the Finance Act of 1986.
Correct.
Before that, we did not have a specific provision to deal with this.
Absolutely.
So maybe you can tell us what the position was prior to 86, and then come to the position of what it was after 86, and then we can talk about what has happened now.
Right. So Finance Act 1986, it introduced 115 BB, where lottery, crossword puzzles, and other areas,
card games,
games of any other sort, betting and gambling, etc., they were included. Before that, now let me go back to the Income Tax Act again. I would say that the source of the source would be section 2, section 24, subsection Roman 9, which would define what constitutes income. And in section 224(9), it has been stated that races, including horse race, gambling, betting, crossword puzzles, lottery, etc., they are to be regarded as your income. And section 56, it classifies these income as income from other sources.
Correct.
So from there, the taxability of the gaming receipts or lottery receipts or crossword puzzle wins, they are being accounted for, right? So what has happened I'll now come back to the changes. What has happened of late in the via Finance Act 2023, that online gaming has been now taken out of 115 BB and it has been placed in 115 BBJ, right? So 115 BB does not apply anymore to online games, right? It is now given it has been now placed under 115 BBJ. Similarly, the TDS part was taken care of by 194B. Now 194BA has come in. So any TDS on online gaming receipts, it will be taken care of by 194BA, right?
Right, sir. So if I'm understanding this correctly, the position that we initially had was that, of course, we probably did not have online gaming several decades in the past. This is, in a sense, it's a relatively new phenomenon. But winnings from games in general is something that would have originally fallen within the Section 56 bracket, which is income from other sources. That's how it would have been picked up.
Correct.
In 1986, they decided to come out with a fresh provision, which was Section 115 BB. And I want to spend a little bit more time on that. And between 1986 and 2023, the Finance Act of 2023, winnings from all games, including invariably online games, would be captured by the provision of Section 115 BB. And then in 2023, we have this new provision, Section 115 BBJ, which has demarcated online gaming from the other kinds of games which were captured under Section 115 BB. So you now have a dedicated provision. I know you also mentioned the TDS provisions. We'll come to that as well in a bit.
Yeah.
What I'd like to know is what was the need in the very first place to create a separate provision under 115 BB, and now we have BBJ, but what was the need to have that separate provision to capture winnings from these kind of games when even without this provision of 115 BB, they would have anyway fallen under Section 56, which is income from other sources?
No, the point is, we have some heads of income.
Right.
There are 5 heads of income. Income from salary, income from business, income from capital gains, then you have income from other sources.
And income from house property.
Income from house property, income from other sources. They are the 5 heads.
Right.
There can never be, it was never thought that there could be a dedicated line of business where professional gamers would come and make money. So it was always dubbed as casual and non-recurring. It will be coming once in a while. Suppose I make up a mind that I'll go and put money in some lottery. So it was a casual and non-recurring type of, the nature was casual and non-recurring. That is why, it was not classified under any business head. It's not business. So therefore it was, clubbed under 56 as income from other sources.
Right.
So that's the reason. And 115 BB came in to demarcate a special tax rate. Right. 115 BB came in to demarcate a special tax rate, 40% to begin with. In 1986, it was 40%. I think in 2001 or 2010, it was changed to 30%. And now we are stuck with 30%. So the point is, because the nature of gaming and lottery and everything else is casual and non-recurring, in the minds of the legislator and the minds of the policymakers, it was always taken as income from other sources.
Right.
But now, with the growth of the industry, as the numbers would show, somebody has reported that from 90 million gamers or gaming participants in 2016, now the numbers are 507 million, and it will be rising to 700 million in 2025. And with from 10 number of gaming companies in 2016, now we have 915 gaming companies, 500 startups, gaming startups, 15,000 sports app developers in gaming, 20,000 crores of investment in as FDI in this sector. So the sector is now too large to be clubbed with lottery or crossword puzzles or races or horse races, right? So yeah.
So and the other thing I noticed about just generally the structure of these various provisions that fall under 115 is that it sort of provides that it provides for the treatment of this particular activity. So for if it's 115 BB, then horse racing, card games, lottery, crossword puzzles, etc. Winnings from those activities. It provides for the taxation of that activity at a specific rate, and then it says that the rest of your income tax will be calculated as per the other provisions. Absolutely. And you have a similar construct for section 115 BBJ as it relates to online gaming.
Correct.
We'll come to the constituent elements of that in a bit. What is the reason for this demarcation to say that online gaming or crossword puzzles or whatever it is will attract this particular rate, and the rest of your income will be calculated as per the other provisions? Why? Is there any significance to this particular distinction that's being done between the specific activity? Because the chapter under which it falls is Chapter 12, special rates, special provisions as to rates. Is there any reason that they bring a distinction between the activity that they're trying to legislate for and the rest of your income?
Yes, Chapter 12, as you said, it's a special chapter in special cases, right? So it starts from section 110. Ends with 115 BBJ, that is the online gaming.
Right.
And within that, you will find a variety of activities which would have given rise to a particular type of income, right? So you have income from transfer of carbon credit. You have income by way of transfer of virtual digital assets.
Right.
You have there is a section called 115 BBE. In which you add, all those additions under section 68 to section 69D, they are now said, it is now said that all this income would be income which would be taxed at 60% of the rate. Right. And this particular chapter also include many concessional areas of taxation, not just the high-end taxation, but the concessional areas. It houses section 115 BAA, BAB, those are for companies who are ready to forego their deductions and exemptions for a lesser tax, right? BAB for the new manufacturing companies, new manufacturing domestic companies, BAA for the domestic manufacturing companies, right? BAC is for individuals and HUF and other entities, right? Concessional rate. So now to me, Chapter 12 appears as a basket where you have the top end marginal tax and also the concessional tax rates. The reason as to why it was secluded from the effects of any other provision and put in a special bracket is the nature of the business which is being pursued by the taxpayer, and on which the legislators and the policymakers felt that there has to be a special rate, whether high or low or median, left to the decision of the time.
So this is a point which you've made, which I want to come back to at the very end. But before that, let's now talk about the provision itself. As you mentioned in your opening remarks, there are definitions which are provided for things like online games, for that matter, even for the term internet, and computer resources pegged to another explanation 144B, which in turn is again cross-reference to the Information Technology Act.
Yes.
With respect to online games, what I noticed about the definition is that it says that it speaks about games that are offered, to users and are made available on the internet or through a computer resource. Is there any significance to the word offered, which is used in that provision?
No. That word offered is part of the definition in the intermediary guidelines and media ethics code. Offered in case of a game is similar to the advertisements in the cases of the lottery also. It invites the public that come and buy a lottery ticket. In similar manner, on the internet you get the offer that are you ready to participate? Are you ready to open an user account with me, become a user with me and play this game? So it's an offer. So offer has very commonplace and easy meaning as regards a gamer.
where I'm coming from when I ask that question, and I fully take what you've said, is that now there are some games which are available in which they put out the source code, and you have examples of where the gaming community takes the source code and creates games of their own, which are then available to gamers in the community. So it's not something which is offered directly by the intermediary that is hosting it, but it's something which is, it's an addition, or it's a subsequent creation by the community of gamers itself. So I wondered whether that would also fall under offered. But on a second reading of the definition, I think there's nothing to really carve that out of the definition. So I think it does fall within it.
Absolutely.
There's a definition of, as I said, computer resources, which is cross-reference first to explanation 144B.
Yeah.
And then subsequently cross-reference, if you look at explanation the explanation to section 144B, you see that it's cross-reference to the Information Technology Act.
21K of the Information Technology Act 2000.
Absolutely.
Right? Yes.
So my first question is, why have a double cross-reference? I know it's a harmless thing that they've done in terms of writing the legislation, but it's just something that I suppose I spent a couple of minutes thinking about. And the second is there any significance to Section 2, subsection 1, clause K of the Information Technology Act, or does this just go back to the point that you were making earlier on about how, as far as possible, the Income Tax Act writing should be harmonized with other agencies in terms of how they have crafted their positions, particularly since it is those agencies that are supervising or regulating the activity?
Correct. With regard to computer resource, you say that 144B reference has been made, but section 144B of the Income Tax Act is relying on 21K of the Information Technology Act. So they could have easily gone to 21K of the Information Technology Act. But now that 144B, our own act, includes that reference, so it's better to rely on 144B, right? Yeah. But there is another thing which you will notice in both in the new amendments, both in 115 BBJ and 194 BA. Here, the explanation, there are parts of the explanation which is explaining the explanation. Right. It is not flowing from the main part of the rule or the main part of the section. There are explanations, for example, the online gaming intermediary, etc., online and internet, etc. It is not there in the main provision.
Main section is there the explanation.
But there are explanations to the explanations, which is an oddity. But again, it does no harm to the eventual construction and eventual meaning which is coming out of the provision.
All right. There's also the term internet, which is defined.
Yeah.
And it's harmless that it's been defined.
Yeah.
At least I think it's harmless. Is this the first time that the word internet has been defined?
Absolutely. And the definition of internet is exactly in terms of the that Intermediary Guidelines and Media Ethics Code 2021. Absolutely, word for word.
Okay. All right. Okay. So that's one part of the equation, which is the section 115 BBJ, which says that the taxpayer is subject to tax as per what section 115 BBJ says.
Yeah.
That's one part of the equation. The other part of the equation is the deduction of tax at source. Now, in one of our earlier episodes, we spent a lot of time talking about what TDS and TCS is, and we'll put a link to that episode in our show notes and in our description so that you can look at the episode and watch it. But just to summarize for now, in very broad terms, tax deduction at source is basically that when a payment is made to someone and that payment is generally speaking considered to have an element that is subject to tax, the person who is making the payment is required to deduct a certain amount of that payment and pay that amount to the government.
Correct.
And pay the balance, of course, to the person to whom the payment is to be made. That's correct. In very broad terms how TDS works. And as you mentioned again in your opening remarks, there have been changes to how TDS works with respect to online games as well. So can you first begin by telling us, sir, how did TDS work in respect of online gaming prior to the Finance Act of 2023?
Correct. So prior to Finance Act 2023, income was being deduced in terms of Section 115 BB. And Section 115 BB's income was the TDS component was coming from Section 194 B. 115 BB's language is winnings. The difference between 115B and 115 BB and 115 BBJ is just the one. In 115 BB, it is winning. In 115 BBJ, it is net winnings. That is the salient point of difference between the two.
Right.
So in 115 BB, what was happening was that winnings alone were to be taxed. The losses are to be, ignored.
Forgotten about.
They are not to be factored to compute your winnings. Now as you go further, we'll examine as to how 115 BBJ and 194B have been crafted.
Right.
But for the time being, let me tell you that 115 BB only went to tax the winnings, losses ignored.
Right.
So 194B only looked at the winnings, and on the winnings 30% was deducted as TDS. So that was the earlier position.
Right.
Now with 115 BBJ and 194 BA coming, it is the net winnings which is to be taxed. And net winnings, we have a formula now which has come out.
Right.
Rule 133. And based on that formula, 194 BA would be triggered.
Right. So the position that existed prior to the Finance Act of 2023 is that we had a provision, section 194B, which would say that that TDS would be deducted on winnings that are paid out, to the winners of the participants of various games. And in addition, I believe what that provision also said is that the rate of TDS was also at the rate in force, which you'd have to go back to 115 BB, which was 30% as of just before the Finance Act of 2023. And the other, I think, the critical element in 194B was that you would only be the TDS would only be applicable in respect of payouts in excess of a threshold, which I think was 10,000 rupees.
Correct. Absolutely.
Now we have, and you'd alluded to this a little bit, that we now have 194BA,
Correct.
Which firstly, it imposes the TDS not in respect of winnings, but in respect of net winnings.
Absolutely.
And we'll talk about this distinction a little more. And as you say that we now have a prescription as to what net winnings are and how they should be computed.
Absolutely.
And moreover, there's now there's no primary legislative threshold in terms of what that amount, whether there's an amount in excess of which the TDS has to be calculated. It needs to be calculated in respect of any net winnings which is paid, with a small exception for which we'll come back to the rules.
Yeah.
Is that a fair summary of
absolutely.
The
So let me tell you, before 2023, and even now probably you can tell, this is a special case. Gaming, receipts from gaming, and if you include lottery and crossword puzzles and etc., it's a special case, right? Here, although the TDS was happening earlier in excess of 10,000 rupees, even a rupees earning also, it would force you to be filing your returns and pay 30 paisa on that, right? There is no basic ceiling for taxability of winnings from lottery or crossword puzzles, etc., right? There is no basic ceiling, and there is no deductions, no allowance. You cannot have a winning of, suppose, say 100,000 rupees or maybe 300,000 rupees earlier to 2023, and you say that out of these winnings, I have invested some amount in PPF and some amount in LIC, and give me the deductions. Even those deductions will not be allowed to you.
Correct.
You are to pay a flat rate tax of 30% on your gross winnings prior to 23. Right? So this is the basic difference between income earlier in the nature of 224(9), and the rest of the income under various other heads.
And just I think two other things which I noticed. I was going through the Income Tax Act and the income tax rules yesterday. I noticed that section 194B was inserted in 1972.
Correct.
And at that point, there was no 115 BB. So there was a gap of maybe 14 years when there was no 115 BB, but the obligation to deduct at source was still there in respect of...
in 1972, the threshold was 1,000 rupees.
Right.
It increased to 5,000 rupees. Then it increased to 10,000 rupees.
In 2010.
Yes. It started with 1,000 rupees.
Right. And then the other thing the other difference I notice in the structure of Section 194B and Section 194BA in terms of how it's written is that 194BA starts with this non-obstante language, which is notwithstanding anything contained in any other provision of this Act, whatever happens. You don't have this language in 194B. What is the significance of this additional language in 194BA, and what would have happened if we did not have that opening language?
Notwithstanding being prefaced, not just in 194BA, but also in 115BBJ.
Right, correct.
As against 115BB and 194B, you have 115BBJ and 194BA. 115BB and 194B does not contain anything in the nature of notwithstanding content here.
No, non-obstante language.
No, non-obstant. But 115BBJ includes that one, and 194BA includes that.
Correct.
To me, that could be two ideas propelling, the use of notwithstanding. For 194BA, notwithstanding would have helped in this manner. We have a section called Section 5. Section 5 defines the scope of income. What could be your income? For a resident, it is income which is received or deemed to be received, accruing or arising, or deemed to be accruing or arising, right? These are the 4 or 5 parts of the scope of income.
Right.
In 194BA, the scope of income is not that. It is withdrawal from the user's account. Right. This is a concept which is being introduced in the Income Tax Act for the first time. Your income, constructively, it has arisen the moment you have owned something, right?
Right.
And the intermediary would have computed your net winnings and would have found out that yes, you have a net winnings. Because you are not withdrawing from the user account does not make it as non-taxable or non-TDS, that you cannot make any TDS thereon.
Right.
So Section 5 has been silenced by the use of notwithstanding, non-obstant. In 115BBJ again, it starts with notwithstanding. The reason could be the operation of Section 58 subsection 4. As we discussed earlier, this income from different sources, sources like lottery, crossword puzzles, games, etc., they are put under income from other sources, right? And 58.4 would say that no allowance or expenditure will be allowed against these income.
Right.
Income of this nature. So 58.4 has been silenced, it has been silenced by use of notwithstanding in 115BBJ. So to me, these are the two broad ideas, probable ideas as to why they have to use that word notwithstanding before 115BBJ and in 194BA.
So I think those are two good reasons for why that language might have been inserted. But as you were explaining this to me, another thought came to my mind, which is, could this also work in a way that, if I were to consider myself as a professional gamer and say that online gaming is my profession and I ought to be taxed as a professional, would this language make it now impossible for me to treat myself as a professional gamer and to be taxed as a professional? Would I, in respect of whatever I make out of online gaming, am I now bound by 115BBJ and 194BA?
The legislation in the way it has been drafted, both under 115BB and now, it will make it impossible for any professional gamer to be taxed in the manner of a businessman, that he is running a business of online gaming. It is not possible.
Or that he's in the profession of gaming, that's not possible anymore.
Academically, theoretically, practically, it is not possible.
So let's not talk about that anymore.
Yes.
But what I would like to understand is, in terms of if you had to describe what the problem statement for the revenue was, what was the tax leakage that the revenue was trying to plug through these changes in the Finance Act of 2023?
One point I would have highlighted earlier is that the size of the market, the growth momentum of the market, of the sector, right? And a lot of thrust also given by the government over a period of time. In 2022-23 budget, we had the finance minister announcing ABGC, that is animation, visual effects, gaming and comic, as one of the thrust areas in which India can really do well. And for that we have there's a team which is working on that one. So the growth, the numbers itself would show that online gaming is big in India, right? This is number one. And number two would be there was some problem in the construction of section 115BB and section 194B. 115BB, I am not very sure about the problem in the construction, but 194B had a problem because the language they used there was exceeding 10,000 rupees, right? Exceeding 10,000 rupees.
Right.
So whether it meant a one-time payout of more than 10,000 rupees or an aggregate of payouts totaling 10,000 rupees in a financial year or not, it was not known. So that resulted into structured planning so that your gaming payouts would be less than 10,000 in each case. So there would be no recourse to section 194B TDS. So that was a major problem in the drafting of section 194B. I would not say major problem, but because the legislation itself was untested for a long time.
Correct. It was a provision of 1972 and you were trying to solve a problem in 2022.
Correct. So that was the reason as to why, because it remained uncontested, unchallenged, untested for a long time. So people, you give somebody something for a long time, so he will find out something to get around, right? So that was the reason as to why the policymakers thought that we would have a more robust, transparent working of the taxation part of the online gaming sector.
Right. So now when I read section 115 BBJ with section 194 BA, it's fairly clear to me that all of the tax involved over here is going to be deducted at source. There's nothing, we will not have and please correct me if I'm wrong, but we will not have a scenario in which any amount is paid to a user and the user is having to separately pay tax in respect of winnings from online games. He will of course have to, or she will of course have to file a return. That's their obligation. But there's no tax that they will have to pay on account of online gaming because all of that is being picked up and deducted and paid by the online gaming intermediary.
Correct.
Why has this provision been structured like this?
Yeah, that could be two ways of looking at the TDS provisions. In some of the TDS provisions, suppose 194C or 194 in case of dividends, 194C in case of contracts, 194H in case of commission, 194J for professional services and technical services. You have the rates, the TDS rates, hard-coded into the act.
Correct.
That this is the amount.
Right.
But in some other cases where the situation is iffy most of the time, for example, interest on securities or interest other than interest on securities, on salary, even salary under section 192, remittance to a non-resident under section 195, and this gaming and resourcing and all those things, right? In which the language uses rate in force, and the rate in force would be coming out very clearly in the Finance Act, Part 2 of the Finance Act.
Right.
Part 2 of the Schedule 1 of the Finance Act would say about the TDS rate in respect of those sections where the prescribed rate is the rate in force. Right. So now your question is why the whole of the tax is being extracted through TDS. As I told initially that it was thought to be a casual and non-recurring type, that you pay, play, win and you forget. That's one part. But it is not only confined to this area only. There are other classes where the department, the revenue does not want the tax to be delayed any further. In case of non-residents, right, who have income from investments or from capital gains, etc., the full tax is being extracted at the time of TDS. The full rate is there. So we don't wait for the non-resident to be filing a return and paying the remainder of the taxes. So in case of certain sectors of business and in case of non-residents, it has been the practical experience of the department to get the tax at the TDS stage itself without waiting for filing of a return.
There's also, in the case of online gaming, there's also a real risk that some of the users or participants may otherwise have a very, very limited scope of income. So there's no way to actually ensure that all of them will be paying that tax. It will be a huge administrative issue as well. So that's perhaps another reason why it actually ties into the reason that you mentioned in terms of why the revenue might have saw fit to deduct all of the tax at source at the time of payout as well. When we read section 194BA, it becomes clear that there are, broadly speaking, two events at which this TDS is triggered.
Correct.
One is, as you alluded to earlier on, at the time of a withdrawal being made by a user from their user account, and the other is at the end of the financial year. Could you explain to us the logic behind each of these triggers as to why have these been the triggers at which TDS is being taken out?
Correct. So because the language used in 115BBJ and 194BA is that net winnings alone is to be taxed, both for the purpose of TDS and for computation of income. In terms of prescribed rules, so one would have expected for 115 BBJ there would be one rule, and for 194 BA there would be another rule. But they have combined both of them into only one rule. The rule is
133.
133. Rule 133.1 talks only about computation of income in terms of 115 BBJ.
Correct.
Nothing else.
Right.
And the formula is I'll give the formula. It's A plus D minus B plus C.
Yes, sir.
Right. So A would be the total withdrawals. D is the closing balance in the user account. B will be the total non-taxable deposits, and C is the opening balance in the user account. So this is the 115 BBJ computation, A plus D minus B plus C straight away, right? Now after 133.1 we have few more illustrations, right? We have 133.2, then we have 133.4, then we have 133.6. These three are the three possible scenarios in which net winnings can be captured, right? Taxable net winnings can be captured. 133.2 would be the first withdrawal. 133.4 will be the subsequent withdrawal, and 133.6 is the closing balance in the user account. So in all these four scenarios, one is the total income for the year,
right? 115
BBJ, 133.1, rule 133.1. And for the other events happening in a user account, we have 133.2, 133.4 and 133.6, right? First withdrawal, subsequent withdrawal or withdrawals, and the year-end balance in the user account. So all things are being taken care of. But the major part here is to understand the user account. First of all, user account. The relevance of the user account for the purposes of taxation, how it is to be maintained, in what manner deposits are being credited over there and withdrawals are being debited over there. What does it say? So the rules and rule 133 and the later guideline which came also, it has explained in quite great detail as to how it has to be operated and triggered.
Right, sir. And just to add to all of the points that you made, I think what the revenue seems to be after is I think it's trying to do two things. Basically, it's trying to capture a scenario in which a user is having won something, having been the recipient of net winnings in his user account. When they take the money out of the user account, they want to capture whatever net winnings there might be. So that's a cash flow event, and they want to ensure that at that phase you're able to deduct tax at source. Right. I think that's one thing. And the second thing is this, I would almost call it a legal fiction, where they at the end of in fact it's not, I would not even go to the extent of saying it's a legal fiction, but at the end of the year they say that based on whatever is there in the account, we will run a calculation or a computation to determine whether there have been net winnings at that stage, and we will, if there have been net winnings, then we will require the intermediary to deduct tax at source. I think it's just they're just trying to collect tax at the appropriate junctures.
Yeah, and I would also supplement what I have said earlier as to why withdrawal has become the new trigger for taxation,
Right.
and not the winning. Now the point is, from the user account, an amount is deposited. The amount is deposited by the participant, right? And from out of that amount, he directs the intermediary that you take this money from my user account, use it as my contest entry amount, right?
Right.
My contest amount, and out of the contest amount, he wins. Suppose he wins something, right? That is being credited as his taxable winnings.
Right.
That is being credited in the user account.
Right.
Now the user account is not operated solely by the games participant, right? There is a follow-up process. There is an administrative process. There is a systems process also, in which that amount will be credited to the user in some other account, right? At that point in time, the money becomes his. The money becomes the money comes to the credit of the person who has owned the game, right? And it comes to him for his full use, right? So as long as the winnings rested in the user account, it was not 100% his.
Right.
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 He had he could as well play another game.
Correct.
Right.
Correct.
And to take the money out, there will be some lag, right? There will be some request that let the money be withdrawn from my account. So there will be some systems verification, some administrative issues, and then money will flow. Of course, it flows, in real-time basis. It doesn't take much, but there is a lag between the money being put, the winnings being put in the user account, and the money being taken out of the user account to any other account of the user.
Being something that the user can actually touch and feel. Of course,
Yes,
everything now
of
comes
course.
into a bank account and everyone does net banking. But
Exactly.
but if I understand, I take your point completely that
Yeah.
there's a lag between the funds coming into the winnings coming into the user account and the money coming from the user account to something which the user can use for purposes other than online
Absolutely.
gaming. So I think that point is well taken.
Yeah.
194BA subsection 2. I thought that was a very important provision actually, because what it says is that to the extent that you have that net winnings is paid in the form of kind or a combination of cash and kind, it remains the online gaming intermediary's responsibility to ensure that before any of these things are paid out to the user or credited to the user account, that the TDS is deducted. That tax is paid in respect of these winnings. And the rules then tell us about, and the subsequent guidelines tell us about how this can happen. My question is actually a conceptual question, I suppose, a little bit, which is, firstly, why is this obligation being cast on the intermediaries in respect of payouts which are made in kind, ensuring that tax is paid in respect of those payouts? And secondly, do you think that this obligation in 194BA subsection 2 will actually push a lot of operators towards a cash-only kind of a format?
No. At the end of the day, the TDS is happening not on the intermediary's income. TDS is happening to the winnings. It is not part of his platform fees, right? It is something else. It is somebody else's income. He is only, affecting the TDS part, right? He is doing the TDS part of somebody else's income, right? So to me, the insertion, or rather, the provision of 194BA2 exactly in pari-materia with what happened in 194B. 194B proviso also would have said the same thing, right? That if you are, giving out something in kind, then make sure the TDS has been deducted over there, right? Suppose, a commodity or a fancy car or some, some foreign trip is also made part of the prize pool, right? Then those are not accounted through the user account. Then somebody has to stand up and pay the TDS thereon, because it costs, right? The intermediary would have paid money in order to secure that kind of privilege for the winner, right? So the point is, it is the winner who has to make sure that he has paid the TDS or he has made arrangement with the intermediary that TDS has been made, has been paid, then only the winnings can be released.
Do you think that there'll be a shift in terms of how whether operators go to a cash only format of paying winnings, or will they? Do you think this will keep operators relatively unaffected in terms of whether their winnings are structured in cash plus kind or kind only?
There will be no effect.
There will be no effect
because all intermediaries are aware of this provision because it is earlier existing in 194B.
All right. So I know you've mentioned already Rule 133 many times during this discussion, and in fact you'd even walked us through the various parts of 133 in terms of 1, 2, 4 and 6. But I want to go through these provisions a little, I want to examine them a little more closely because they have formulae, and I want to understand what is the purpose of each of these formulae, and B, how these formulae work out. So the first thing that you had pointed out earlier on is that there is one formulation in Rule 133 Subrule 1 which tells you how to compute net winnings for the purposes of 115 BBJ, and then you have separate formulations for the purposes of calculating net winnings for deduction of tax at source for the purposes of 194 BA.
Right.
So first question is, now why do we have these two different formulations for computation under 115 BBJ and then these other formulations for 194 BA? What purpose is the rule trying to serve in respect of?
Let me again recount the 4 formulas for the purposes of either computing income under 115 BBJ or the 3 different scenarios under section 194 BA. The first provision, that is Rule 133 Subrule 1, it tells you the formula with regard to the income of the full year. The formula, as I told, it is A plus D minus B plus C, where A is the total withdrawal, D is the closing balance in the user account, B is the total non-taxable deposit, and C is the opening balance in the user account. Coming to the first withdrawal, which is available in 133.2, the formula is available in Rule 133.2. The formula is very simple. It is A minus B plus C. So A, as usual, it is the total withdrawal, B is the non-taxable deposit, and C is the opening balance. Subsequent withdrawal, it follows again the similar principle, A minus B plus C plus E. So A is the total withdrawal, B is the non-taxable deposits, C is the opening balance, and E is the amount which has been taxed earlier, on which TDS has already been paid under 133.2. And the last part is the closing balance in the user account. How do we find out? The formula is very simple, A plus D minus B plus C plus E. So A is, as I told, A is a total withdrawal, D is the closing balance in the user account, B is the non-taxable deposits in the year, up to that of the year, and D is the closing balance, and E is the amount which has already been taxed under 194 BA.
Right.
So these are the 4 formulas, right? And the best part is that when you compute the tax emerging out of 133.1 and you sum up the tax, the TDS part coming out of 133.2, 133.4 and 133.6, they will match. Right. So 133.1 tax is equal to tax under 133 Rule 133.2, 133.4 and 133.6.
It's almost like a mathematical equation where the left-hand side is equal to the right-hand side.
Absolutely.
Or like an accounting ledger where you ultimately your debits and credits end up matching.
Absolutely.
So as you say, when you perform the calculation under Rule 133 Subrule 1 for the purposes of 115 BBJ, the result that you get over there will be the aggregate of the calculations that you perform under Rule 133 Subrule 2, Subrule 4 and Subrule 6. So, and these formulas are designed to work in that particular manner.
Absolutely.
So, let's now just get into the formula a little more. You described each, and the good thing about the way this particular rule is written is that they've used the same variables across the rules. So if A means something in Subrule 1, it means exactly the same thing in Subrule 6, in the sense that A is the withdrawals that you've made during the year, D, as you said, is the closing balance. B is the non-taxable deposits that have been put into the account. C is the opening balance. E are the withdrawals that have taken place up to the point of.
E is already taxed amounts.
Correct.
Already
So
taxed amounts.
the amounts which have already been
TDS,
net winnings which have already been subject to TDS.
TDS.
Right. So if we can then just, I know it may be a little hard to sort of think up numbers on the spot, but if it's possible to do that, so can we just get an example of now how each of these sub-rules work?
So examples with regard to determination of the total income under 133(1) or TDS under 133(2), 4 or 6, they can be given, but it will be difficult for the readers to follow up on what examples I will be giving. It will be better that if we make a representational picture of our example and put it out for the readers for their easy reference.
Sure, I think that's something. So we'll put up an example in our show notes and in the description. So that's something that the users can understand. Now we see in these rules references to both taxable deposits as well as non-taxable deposits.
Correct.
And in fact, non-taxable deposits is very clearly identified as being one of the variables in the formula, B, if I'm not mistaken.
Correct.
What is the difference between taxable and non-taxable deposits, and what is it that the revenue is trying to solve for by creating these distinctions between taxable and non-taxable deposits?
Yeah, so non-taxable deposit is basically hinting at the contest entry amounts. That is the user's own money, which he has put in his wallet, in his user account, and he is deploying those to play the games.
Correct.
It is his own money, so therefore it is non-taxable. It is already his taxed money from any other source, and from any source of his, and he's putting it, he's crediting those amounts in his user account, right? So those are non-taxable amounts, and they alone are allowed to be deducted in the formula given, right?
Right.
Taxable deposits will be basically winnings.
Right.
Or what is being remitted by the intermediary by way of bonus or whatever, bonus, promotional money, token, etc., which is deemed as taxable in view of the reasoning given in the rule and the provision of the Act.
I understand, sir. And do these taxable deposits get taxed at the time at which it is remitted to the user account, or do they only get taxed, for example, if it's an incentive, or if it's a bonus, or if it's some sort of a referral commission of sorts which is given, or if it's even a multiplier which is given to the users? Do they only get taxed when these are ultimately used by the user during the course of the game and actually result in something?
Must remember one basic guiding principle in the rule and the guideline is that any bonus or any referral money or any kind of incentive which is being credited to the user's account, which is not encashable and which is not withdrawable by the user, that is not to be accounted for in any part of the taxable receipts or taxation itself. It has to be ignored in full. But referral money or promotion money or bonus or incentive, etc., which can be withdrawn by the user, is fully taxable. It becomes part of your closing balance also, and if you are withdrawing, then that also becomes part of your taxable withdrawals.
Correct. And I think, if I'm not mistaken, so there's an explanation at the end of the rule which actually contemplates this scenario.
Correct.
And as I understand, it says that at the time when any of these incentives, etc., are recharacterized, then at the time of recharacterization, it's deemed to be a deposit, and it's deemed to be withdrawn at the same point of time. So that's an actual legal fiction that works over there. The other interesting thing I noticed in the explanation is that there is a reference, or there is a reference to the possibility of payouts being made to users otherwise than from the user account. What is it that the revenue had in mind over here? What are they trying to solve for over there?
Right. So the point I would have told earlier, reiterating it now, is that user account is the only medium through which the taxability aspects of the remittances, withdrawals and inward remittances, they are being considered. But if there is some way in which the intermediary is benefiting the user, not through the user account, but through some other medium, meaning thereby, suppose, for every prize won in a particular contest, a IPL box ticket is also given free, which is purchased by the intermediary and given to the winner. That intra-alay becomes a withdrawal in the hands of the user on which he has to pay taxes. There will be a TDS component to that one.
Right. I think that example is a very useful example. So, is there anything else that you want to mention about the rules? I want to come to the guidelines, but before that, I just wanted to see if there's any other salient aspects about the rules that you want to mention. We've been through the constructs of why you have a separate rule for 115 BBJ. We've been through the 3 different formulae for the purposes of TDS under 194 BA, and we've talked about how these formulae work as well. We also cover the concept of taxable deposits, non-taxable deposits, and how the rule is structured to ensure that there's nothing that basically falls within the gaps. Are there any other salient points that you want to identify, that you want to talk about in respect of the rules?
The rule, as far as the time is concerned, because there is hardly probably a month or so in which the rule has been announced, right?
Right.
So the rule as yet is untested.
Right.
But from the first look and feel, it appears as mathematically possible to deduce income in respect of 115 BBJ, which will be exactly similar to what is coming out of the TDS part.
Right.
So to that extent, theoretically, it appears good. But looking at the various components which go into the user account, my feeling is that the explanations and the guideline which has been given may not be complete answer to many of the queries which are going to be raised.
Right.
Little
So
later,
there might be,
yeah.
There might be a few more things that crop up.
It's an evolving story, and things will move pretty quickly because the technology aspect of the gaming is probably the highest in any other sector, right?
Correct.
Because this is born and fed upon technology only. So there will be many areas in which the legislation and the rule may be falling short, but I don't know what part. But I have a hunch that more clarifications and more guidelines need to come.
So to an extent, it's very difficult to forecast the complete array of possibilities that could come up, as you say. Firstly, because this particular industry is highly based on tech, and these things can evolve and develop at a very, very rapid pace. I think far more rapid than a lot of people can imagine also. And I think it may not be possible, frankly, for the revenue to actually contemplate all of these scenarios. I agree that a lot of these things will evolve over the course of time. We will be seeing a lot more in respect of this. But for the moment, in terms of a rule, I think, as you say, it seems to be a theoretically sound rule. There will be things and scenarios that crop up, and to the extent that some of these are based on real life scenarios, I'm sure those will have their own implications in terms of whether further clarifications or further development of the rule is required. With that having been said, let's also come to the guideline which was issued. And I guess my first question over here would be, sir, if you could just first clarify what is the difference between a circular, a notification, a guideline, a rule, maybe just that basic theoretical clarification.
Yeah, so both circular and notification are legislatively provided. You cannot take out a circular without the legislative competence or an enabling provision in the legislation itself. For example, the guideline which has come out with reference to 194 BBA is coming out of the enabling provision in 194 BA3, right? 194 BA3 is giving you the power that the government, in case of difficulty, will come out with guidelines.
Right.
That is why this guideline. So, in all the cases where circulars are taken out, circular and guideline are interchangeably used.
All right.
Right. So you have guidelines which guideline oblique circular coming out of the provision of 194R 194S. So there will be circulars which is basically to remove difficulty, administrative difficulty, to clarify government's position. Circular is binding on the revenue. Circular does not bind the
taxpayer.
Circular does not bind the courts and the appellate authorities.
Okay.
Whether it binds the taxpayer or not, it's a matter to be tested, because the very guideline, very circular on 194BA, which has been issued, it contains that last line that it is binding also on the taxpayers. But in liable fitting cases, there are challenges even to the buyers of the circular.
Right, sir.
And on the notification part also, notifications are issued again on the strength of the enabling provisions in the Act itself. For example, the inflation index, cost inflation index, in which you compute the capital gains under Section 48. Every year there is a cost inflation index number,
right,
which comes out. For assessment year 23-24, it is 348. How does this come about? Because Section 48 has enabled a notification to be issued. Under Section 35, for example, for scientific research expenses, if you pay money to a research association which is notified, then only you are entitled to some deductions. So there is a notification under Section 35. So notifications are issued, circulars are issued based on the legislative leverage which is available in the legislation itself.
Right, sir. So now let's look at those individual guidelines that have come out. The first guideline talks about a scenario in which a user has, I think, multiple user accounts or multiple wallets in respect of the same platform, and it simply says that all of these have to be aggregated for the purposes of determining what the net winning is, and as a consequence of that, what the obligation to deduct tax at source is, and the other thing. But it also talks about a scenario in which, a single intermediary might have different platforms, and in respect of these platforms, it treats them as two different users, and therefore it needs to, when you make a transfer from one account to another account, there are some specific circumstances in which it wants to say that it needs to be treated as a withdrawal. Could you talk to us about what these scenarios
exactly are? Most games companies, games intermediaries will have a single user account, right, for their entire platform. But there would be games intermediaries, online games intermediaries, who would have different platforms. Suppose one for football, one for cricket, one for baseball and American football, etc. Right? So these platforms, what has been stated is that one user account, one platform, and the TDS provisions will apply accordingly. One user, multiple user accounts under one platform, they are to be clubbed together for the purposes of determining income under 115 BBJ and for TDS under 194 BA. If there are different platforms, as far as possible, you integrate the platform as far as the single user is concerned. But if there are different platforms and you are deducting tax differently for the same user under two different platforms, using two different TAN, etc., then the issue of withdrawal and deposit in these cases will mean very different than the earlier case, in the sense that here withdrawal and deposit will be accounted for. In the first case, where one user has multiple accounts, and the intermediary has enabled all those accounts to be consolidated for the purpose of TDS, there will be no question of any withdrawal or deposit for the purposes of determination of tax or TDS. But if taxation or the TDS is being done differently, then the whole force of the meaning of withdrawal and deposit in the formula, that would apply. That means it becomes taxable
in respect of each of these accounts for the different platforms,
for which separate taxation is being made. separate taxation of each account which is being made, then transfer from one account to another will
Be treated
mean
as a withdrawal.
Yeah, it's a taxable deposit or a non-taxable deposit, or the case may be,
Right.
or withdrawal.
So what are the circumstances in which a single online gaming intermediary could have multiple TANs? When will those sort of scenarios arise?
Okay, so TAN is a tax deduction account number. There is a possibility that TAN is allotted to a single company for different branches, different divisions. And it's just not the company, even the individuals also, or HUF or trust who have different branches and divisions, then can apply for. So an online gaming intermediary having multiple platforms can have multiple TAN through which the tax deductions are made, complied, challans are also issued, statements made, and reports also generated. So that could be a possibility of a single intermediary having multiple TANs for different platforms of his.
Right, understood. And one of the guidelines talks about a scenario in which funds have been borrowed by a user in order to participate in the online game, and it basically clarifies what at least I thought was fairly obvious, that this is going to be regarded as a non-taxable deposit. What was the apprehension that led to this this particular guideline being issued? This was guideline 2, and it said that if monies are borrowed in order to participate in the game, those monies would be regarded as a non-taxable deposit.
Yeah, the answer of the CBDT is very self-evident.
Right.
That whether it is tax paid or whether it is not taxable, but you have deposited that money, it is not to be taken as a it is to be taken as a non-taxable deposit, right? It is a non-taxable deposit because either it is already taxed or it is tax exempt. That is what has been stated. But more than that, let me link it to what is stated in the intermediary guidelines of 2021 amended in 2023. If you look at Rule 4, Sub-Rule 13 of the intermediary guidelines, it says a pretty very clear, salient and vital point. It says that the intermediary should not be financing the gamer, and he should not be arranging for a third party to be financing the gamer.
Okay.
But knowing the income tax department to be oblivious to, rightly so, on the source of the deposits, etc., it has not gotten into quoting Rule 4, Sub-Rule 13 of the intermediary guidelines. It said that whatever money is coming into the wallet through you, whether it is borrowed or its own funds, it will be accounted for, right?
So now that you mention it, I think perhaps the confusion may have been because, I don't know, maybe I'm stretching the interpretation, but could it have been that there was an apprehension that this might be regarded as being an incentive or a bonus of sorts, this sort of arrangement or financing arrangement that the online gaming intermediary is doing for the user in order to participate?
No.
And whether that could therefore be added?
No, in my view, the rule, that specific Rule 4, Sub-Rule 13 of the intermediary guidelines, it has to be followed in toto, in spirit and letter.
Correct.
By the intermediaries, right? And by that logic, it would have been well nigh impossible for the intermediary to be arranging funds for the gamers to play the games, right?
Right.
So it is very clear. And the income tax and the revenue has done the right thing in saying that whether you borrow money from whatever source, that is immaterial for the purposes of the formula.
Right. That's a very simple and straightforward clarification. So we spoke about Section 194B, which says that the TDS would apply above that threshold of 10,000 rupees. And this was in respect of lottery, crosswords, card games, etc. It used to be the provision under which online gaming intermediaries would also deduct tax. Now they have a dedicated provision under Section 194BA. Section 194BA in the guidelines contains a threshold, albeit a very small threshold. It's 100 rupees in respect of net winnings. What was the thinking around introducing this very small 100 rupee threshold? What purpose did the revenue want to serve by including it in the guidelines, and how will it help?
Yes, so that must have been some thought and some data behind putting these 100 rupees, because there could be large number of small gamers who would have made small profit and small winnings. So that has been taken care of by this helpful provision by way of removing difficulties for them. But all said and done, whether it was 10,000 rupees or whether it is 100 rupees, only the TDS part has been taken care of, either through 194B or 194BA. The taxability part remains the same, whether you are earning 1 rupee or you are earning 100,000 rupees or a crore. You have to pay the taxes. Even for a rupee also you have to pay taxes by filing your return and paying the taxes. So what has been taken care of is a little load off the intermediaries, right? Some administrative load off their heads.
Right. I think the other thing is that in the case of 194B, trying to apply that in the case of online gaming, and given the context of online gaming, there was a risk perhaps that you would end up with some people not filing their returns and not actually paying tax. You don't have that so much in the case of 194BA because of the way it's structured. And as we discussed earlier on, because it tries to prevent any leakages through the gaps.
Absolutely.
One of the other guidelines, sir, says that if a coupon is issued in lieu of an amount that's in the user account, then that will be treated as a withdrawal. Right. Coupon or other sort of incentives is given in respect of the amount standing to in the user account, then that will be treated as a withdrawal. Could you help us understand the thinking around this?
So, the basic logic remains the same, that money through the user account is accounted for. Everybody to see, both the gamer and the intermediary and all the regulators can see the user account. But if something is done without the knowledge of the regulator, on a one-on-one basis with the games participant, a coupon is issued in view of some user balance. A discount coupon, suppose up to a limit of 10,000 rupees for you to purchase something, right? So that is not being routed through the account. So that becomes a withdrawal. That becomes a withdrawal and part of your taxability for the purposes of TDS at least, and also for the purposes of 115 BBJ. So coupons, etc., which has a money value, it can be converted to money, that the intermediary is bound to stand up to 10,000 rupees of your purchases in this particular outlet. So that is outside the user account. So anything outside the user account for the benefit of the user becomes his withdrawal.
Right. The other thing I found very interesting in these guidelines was towards the end of the guidelines, there is a clarification of sorts issued in respect of the valuation of in-kind winnings. And what the guideline basically says is that winnings in kind should be valued at their fair market value, except in two circumstances. So my thinking, my question around this is, why would you value winning in kind at its fair market value as opposed to what that winning represents to the user in terms of what the user has actually won? Why would you attach a fair market value to it as opposed to that?
No, it is very logical to correlate a winning in kind to the fair market valuation. There can be no other alternative. You cannot peg it to the size of the user account or the number of transactions. That would be illogical and it will be inappropriate. To me, valuation, meaning fair market valuations, in case of purchase of the item to be given away, the purchase price, if it is manufactured, then what is the price at which it is sold to others? That is the benchmark, and I think it has been done in many other cases also. Fair market valuation for winnings in kind is an appropriate method for valuation.
So just to take that particular example now, let's say that the net winnings of sorts that stands to the user in his user account is say 10,000 rupees, and in lieu of that 10,000 rupees, the online gaming intermediary is giving something which is worth maybe, let's say, in terms of fair market value terms, is actually worth 12,000 rupees. So your contention on this is that the 12,000 rupees should be the value that is taxed and not the 10,000 rupees.
No. See, as I told, the winnings is not defined anywhere in the either in 194 BA or in 115 BBJ. Winnings is coming from Rule 2QD of the intermediary guidelines, right? 2QD, and winnings in there, it says it's a prize in cash or kind, right? Which is to be distributed or intended to be distributed to the participants in line with their performance and the terms and conditions of the contest. As simple as that. So in kind, winnings is a possibility that along with 100,000 rupees as first prize, you are entitled to a trip to Switzerland and back 3 days, 4 nights. How do you value that? You have to value it at the fair market valuation. What will be the cost, approximate cost? What is the travel cost? If he's, getting that package, overseas package, he's purchasing and giving it, then the cost of that package, that will be a withdrawal in the hands of the user.
So the other point in the guidelines was that it makes very clear that GST is to be excluded, for the purposes of valuation of winnings. What's the thinking around that, sir?
First of all, whether GST is applicable to winnings, that's a point to be noted. I don't say that I do not have doubts with regard to any GST, because winnings should not be a goods or a service. Whether it is an actionable claim in Schedule 3 of the GST Act or not, that also remains an issue. But GST being taken out of the valuation for the purposes of 194BA, it's not the first time we have done it. In 194Q, in 194S, the department has issued guidelines saying that GST will not be a part of the total, cost or total valuation.
Right. So, and then as we draw to a close, I guess one of the things which came to my mind is that the rule and the guidelines came out, I think, after the Finance Act, more than a month after the Finance Act came to be enacted. But there's a guideline which says that there was an expectation on taxpayers to have starting to deduct taxes at source under 194BA. Just from a logical perspective and from a fairness perspective, I just want to understand what are the reasons for why it would have been fair to expect taxpayers to have followed 194BA before the method for computation of net winnings was actually prescribed under the rules.
To me, admittedly, there has been a delay in issuance of the rule. The rule came towards the last part of, I think, May, whereas the regime has been effective from 1st of April. So there is a nearly 6 to 7 weeks of delay. But the guideline would have alleviated the lot of pain and misery of the gaming intermediaries. It says that there will be no penal consequences. Hopefully, penal consequences should be meaning 201(1)(a) interest also.
Right.
But 201(a) interest, if it is not waived, so there are recourses in which the intermediaries may go and approach and get a waiver of that.
Right. So are there any other final thoughts that you have on this subject of, and it's been a long conversation about, and we've looked at the whole legislative framework in terms of the Act, the rules, the guidelines, not only as they currently stand, but also as they existed in the past. Is there anything else you'd like to add on this subject of online gaming?
I would say that, introduction of both 115BBJ and 194BA, it's a watershed moment for the direct tax legislation. For the simple reason that the thinking of whether to, that skill versus chance, etc., it has been settled in one way by the department, at least in the direct tax front.
Right.
So it has taken a stand.
Right.
It has taken a stand, and the fact that it is online gaming is not clubbed with other activities in the nature of gambling and betting, it perforce shows that direct tax has a view now, has a view which has changed over its view in the earlier years. So that is one aspect. It's a momentous change of the revenues point of view, and the fact that now allowances and expenditures are to be allowed also. That also is a view which revenue has never taken. So there have been momentous changes, and it's a very bold position of revenue in respect of online gaming. So that's my view. But the point is, there will be issues which will be coming. There will be issues, and there are 2 or 3 issues right on my top of my mind, but which I will not be speaking here. And there will be more emergent issues which will be coming. This is an area and a sector which, if tended well, it may bear not just a good revenue for the government, but also would be a sunrise sector for the economy.
For the economy as a whole.
Yeah.
Mr. Mohapatra, thank you so much for joining us and giving us this, I think, very insightful perspective in terms of how the law has evolved, and what even this particular latest legislation in the Finance Act really means from a broader perspective for the entire industry and the larger policy issues involved. Thank you so much for joining us, sir.
Thank you. Thanks, Aditya.
When we started this episode, I told you that online gaming is truly fascinating and has so many different aspects to it. Today, we discussed the aspect relating to direct taxes, and as Mr. Mohapatra said, this aspect has now largely been settled. In the next episode, we will look at the indirect taxes aspect, which is a significantly more contentious aspect and which, at least for now, doesn't seem to be anywhere close to being settled. For now, that's been another episode of the Private Office Podcast. Thank you so much for watching. Thank you so much for listening. Please do tell your friends about us. Subscribe to this podcast. Give us a 5-star rating. Thank you. Goodbye.